Welcome to USAWatchdog.com. With us, a regular guest, a guy that basically made his first on-air appearance here, I'm happy to say, because he's brilliant, bright, writes a lot, prolific writer. He's over at JS Mindset, which is now basically the Holter-Sinclair collaboration. He's Bill Holter. Bill Holter, thanks for joining us today on USAWatchdog.com.
Thanks for having me again, Greg.
You got tons of brokerage experience, financial experience. You're a prolific writer, as I just said. You know all about this Shanghai Gold Exchange. You know all about gold and stocks, bonds. You're a really good, well-balanced market guy. I know you specialize in gold is one of the things you really know a lot about. What I noticed about this, what happened this week, is the price overseas would be up, especially on Thursday, Wednesday night to Thursday, Thursday night to Friday. They'd be up overseas and then crushed over here. And on Friday, gold got beat down, silver got a small couple of cent beat down. How long can this go on, where it's up over at the Shanghai and down over here at the rigging fraudulent banker COMEX? That's a fact now. How long can that go on?
Well, you're right. It's no longer conspiracy theory. It is conspiracy fact after Deutsche Bank admitted guilt. To answer your question, what you're going to see is you're going to see arbitrage from Asia taking physical inventory from the COMEX, from the LBMA. Because this past Tuesday is when the ABX opened, which is a physical exchange. They're setting a price. They're doing their own gold and silver fix versus London's gold and silver fix. And if those prices come in higher, then there's incentive to sell in Asia and buy and demand delivery in the West. And that's what's happening. That's what you're seeing happen, is that you're seeing arbitrage begin. And this is only 3 or 4 days worth now.
How long can this? I mean, you were saying for the longest time, for 900 million or a billion or $1.1 billion or whatever, they could clean out COMEX for the same price. They could probably clean out the silver side of the deal. How long? I mean, they don't have a deep warehouse to pull this.
No, they don't. It'll go until there's a failure to deliver. Right now, there's 32 million ounces of silver in the COMEX registered category. That's not even quite, we'll call it $500 million. It's $500 million. I mean, you could have one entity clean that up.
Russia just added, 500,000 ounces of gold to its inventory this past week or so?
Right. Comparing that 32 million ounces of silver to the May contract, which goes first notice day this coming Friday, the options expire on Tuesday. There's 280 million ounces of silver contracted for open for May versus 32 million in the registered category. So you're looking at, there's 9 ounces for every 1 ounce that's real. There's 9 ounces with open contracts. Now I'm sure that will bleed down, but they're playing with fire. And if you look at the total open interest on COMEX, on the COMEX silver side, the total open interest is very close to 1 billion ounces. The world only produces 700 million ounces. If you take China and Russia's production out, they only produce 700 million ounces. So that's 142% of global production. And look what happened on Thursday, look what happened on Friday in order to contain the price. There was 37 million ounces of silver were sold in less than 10 minutes and knocked the price down 90 cents. Now, if you go back just a couple minutes ago, I mentioned there's only 32 million ounces of silver available to deliver, and they sold 37.5 million in 10 minutes. And then in 1 hour on Friday, again to contain the price, they sold over 100 million ounces of silver.
I mean, they could go bust in 10 minutes, is what you're telling me.
They could go bust on one trade. All they have to do is
the COMEX.
Right. One trade come in and say, we want to buy 32 million ounces of silver and we want it delivered. And
I think Russia was 500 million ounces of gold. I think it was. I don't know if it was 500,000. I think it was bigger than that. I'm not sure on that. But anyway, but you're saying that so they're when you say they're playing with fire, how fast could this go? Hoofs up, force majeure. We cannot or will not deliver silver or gold. How fast can this unwind?
It could happen between the time you go to bed at night and the time you wake up in the morning. I mean, it could be that fast. It could be done, and you have, at that point, if there's a default, you're not going to have any availability. Silver and gold will go into hiding.
Well, and then what happens to the price? Let's say that somebody comes in and says, instead of dumping 37 million ounces onto the market in 10 minutes, they say we'd like to have 37 million ounces of silver in the next 10 minutes. What happens then?
Right. The thing is, how much, if anything is not available, how much is it worth? That's what you're asking me. And then you have to have a true bid and offer market where in order to get that cup of coffee or that ounce of silver or whatever, there's a bid and offer, and the two parties have to meet. Now, if silver and gold have defaulted and it's unavailable and it's gone into hiding, then there's going to have to be more and more and more dollars bid in order to entice someone to sell the ounce of gold or silver.
Is China going to allow this to go? I mean, or are the markets going to, maybe better put, allow this to go on for a long time? I mean, we're not talking months and months of this going back and forth, where they're buying it in Asia at a much higher price and selling it and crushing it in the United States to a much lower price. That seems untenable to me.
It is untenable, and because the inventories are so small, silver and gold, the registered categories, I think, total $1.2 billion. That's nothing in today's world. That's less than one day's interest that the U.S. pays on its debt. I don't see this going on for a long time simply because the inventories are so small.
And if you, how long do you think this would go on for? I mean, it seems to me it would be the Chinese. I mean, they opened the Shanghai Gold Exchange, which does silver and platinum and other stuff, so it's a little bit of a misnomer. But they said they opened the exchange to, quote, control the price. Now, they have all this silver and lots of gold. They're not expecting it to be crushed downward at this point, are they? I mean, don't they want the price to go to an unsuppressed level, now that we know that Deutsche Bank and Bank of Nova Scotia and HSBC and I'm sure some American banks all pushed the price down since 2011?
Right. They want the physical markets to price gold and to price silver as opposed to derivatives markets where you have leverage of 100 to 1 or more. They want the markets more or less to determine the price.
In other words, you can't go and sell 37 million ounces of silver as they did in paper contract with COMEX, as you were talking about, to push it down. You can't do that at the Shanghai Exchange. You got 37 million ounces? Let's see them. Put them out here.
Right.
Get the pallets. Bring them right out here. We want to see them. Is that right?
You certainly can do that, but you got to have the 37.5 million ounces to deliver.
You got to deliver it. You have to have the ounces. You can't counterfeit them.
It's not a paper. It's not a paper trade. It's not a paper exchange. It's not a netted trade. The metal actually has to be available and has to actually settle.
Well, you're telling me this is total fraud then at COMEX, and they're continuing, even though the fraud's been exposed, now they're continuing the fraud in the open, unabashed.
Greg, this is what we've told you for many years, for at least 10 years. I've been saying that COMEX is a fraud. It's paper trading. It's not real physical metal trading. It's whoever has the deepest pockets with cash can actually set the price. And I want to mention something on that. It seems to me that silver going from $50 down to $15, and the open interest for most of that time remained quite high. So there were big, in the billions of dollars of losses. It seems to me, who could have sustained those losses? And I think the answer is a sovereign, only a sovereign. And to me, it would make sense that it's China. That China has been along all this time. I wrote a year and a half or 2 years ago that I thought China had their finger on the kill switch. And the kill switch being their contractual longs in the silver pit, so that if they decided to push the button and say deliver the silver and default the system, they could do it. And I think they've carried it and carried it and carried it because they've had gold delivered to them. Once the gold does not get delivered to them, they're just going to push the button on all the Western exchanges and say, send us the metal.
Aren't they close to that now?
I think so. I think we're right there. And you saw the gyrations this week. In order to keep gold and silver under control, they have to sell between Thursday and Friday, call it 140 million ounces. I mean, that's 20% of global production. That's like what?
That's just for silver.
That's just for silver. That's 2.5 months worth of silver in 2 days.
They don't have it.
No, it doesn't exist.
So if these people have all these losses, in the pre-interview you're telling me about Jim Sinclair, and he knows other mining CEOs. He has his own mining company, is it TRE, TRX? What's it?
TRX.
TRX, Tanzanian royalty, what is it?
Exploration.
Exploration, okay. So he's got a real gold mine, and he's had real losses. He gave good advice, and he and anybody else, he said, especially since 2011, buy gold, buy silver. You should be buying this stuff because the debt is exploding. That was good advice, but the criminal bankers that they admitted that they're criminals made that look like not good advice. Not only that, but not just that, but everybody who bought and everybody who was mining had these losses. Tell me about what Jim Sinclair and other miners may be doing against these big banks.
Well, Jim is exploring starting a class action suit. Unlike previous class action suits, a lot of them that were brought up did not have proper standing. But what he wants to do is he wants to band together with several other mining companies and their shareholders and bring a class action suit. And what's different now is that Deutsche Bank has admitted guilt. So it's pretty much an automatic loss in a lawsuit because they've already admitted that they've manipulated the gold and silver fixes. What's going to be really interesting is that if these suits don't get settled, it's the discovery phase, which is going to be extremely interesting because then you're seeing emails and texts and trades from companies that don't have the metal to suppress the price. So it's the discovery phase, which is going to be really interesting if it even gets to that.
Rob Kirby said that the other big U.S. banks are involved, even though they weren't named, but they're involved. He says I think he thinks that the epicenter is going to come right into the U.S. banking and U.S. Treasury and exchange, back to the U.S. government.
Yeah, absolutely.
What do you think about that? Can you give me your thoughts about that?
Well, just take J.P. Morgan, for example. They were and are the biggest paper short on COMEX for years in the silver market. Absolutely, U.S. banks are involved. I mean, you have to be crazy to not think they're involved.
How do you think that this is going to shake out? What does this mean for is this any kind of a seminal moment with the Shanghai Gold Exchange fix and then the up and down, the teeter-totter price action? It's up overseas, it's down over here. What do you think this is signaling?
This is a seminal moment for the entire Western financial system. The teeny tiny, please understand that silver production over the course of a year is less than $15 billion. I mean, $15 billion today is nothing. And that, of course, is hand in hand with the gold market. This whole suppression scheme on gold and silver was brought about originally to protect or defend the reserve currency, the dollar, because gold is a direct competitor with the dollar. If the silver market blows up, and I shouldn't even say if, it's when the silver market blows up, that's going to blow the gold market up, and that's basically going to expose the fact that the West is a fraud, that the gold and silver markets were a fractional reserve Ponzi scheme. And that's going to blow confidence, and you'll see, in my opinion, you'll see derivatives blow up all over the world, and markets will be closed in a couple of days. And of course, that goes directly to credit. The world runs on credit, and you going to Walmart each week or going to the grocery store or whatever, the stuff doesn't just appear on shelves. It gets there by several uses or layers of credit.
So this is the domino, pink, that gets knocked over.
Exactly. And silver is a teeny, teeny, tiny domino compared to the whole system, but it will lead to all the dominoes coming down. And China and Russia, they know this. As a matter of fact, this past week, RT Today put out an article that spoke of Western manipulation of the gold and silver markets.
So when do you think this thing might blow? And you have bought and sold, and you write about gold, you write about all kinds of financial stuff. When do you think this could go?
Who knows? It could be 2 days, 2 weeks, 2 months.
You don't think it'll go past into 2017?
I don't see that even as a possibility. It could blow before the market opens Monday morning. We're doing this on Saturday morning. I mean, it could be any time. You tell me when somebody's going to step up with $1 billion to buy twice as much silver as COMEX can deliver, and that's it. It's done. I've also heard that there's a problem. There's a problem on the gold side. Harvey Organ has been informed. He had contacted the CFTC, and it's his understanding now that GLD shares are actually being used for settlement on the gold side. And that's why we've been watching, trying to figure out whether or not gold's being settled, and it doesn't look like it's being settled. But apparently...
Whoa, stop for a minute. You're telling me that people are saying, hey, I'd like to have my gold. And you're saying, well, we'll give you shares of the gold ETF, GLD, and there's your gold. Here's some, paper. Here's some paper gold for you. This is just the same thing. It's as good.
Well, it goes one step further, though, because then they take those GLD shares and they request the gold from GLD. So it takes 4 weeks, 6 weeks, whatever, to get the gold actually shipped over.
How long is that going to go on for?
How much gold does GLD really have? I mean, I don't know. I suspect they don't have all the gold they say. I've suspected that from day one. I believed in 2003, 2004, when GLD and then followed by SLV were formed, that those were basically pressure valves to divert capital from real metal into the paper, and the metal wasn't bought, so it didn't actually put the upward pressure on demand and pressure supply.
What you're describing is a Ponzi scheme house of cards in the very final stages of the game, aren't you?
That's exactly what it is. This is a Ponzi scheme wrapped in a Ponzi scheme wrapped in a Ponzi scheme. I mean, it's multiple Ponzi schemes. Everything is fractional reserve.
So you think this year? I mean, your prediction. I'm going to get you out on here a limb here. You think the whole thing comes down? This is why David Stockman was on, and he said this whole thing, and he was talking about gold and silver. He was just talking about the financial system, that it won't last through the election cycle. It'll go down before the election cycle. So, what's your prediction on how long this gold and silver teeter-totter real market versus the paper market over here, how long can it go on for before it blows?
My guess is it'll happen before the election, and I've said this now for 6 months, that I think there's less than a 50-50 chance that we'll even have an election.
You think it'll be that bad?
If the financial system comes down, you're talking about a breakdown in distribution. You're talking about people going hungry. The old saying, we're only 9 meals away from anarchy In other words, 3 days of no food, and you're going to have people running around on the streets. In that case, you'd have martial law. Would we have an election during martial law? Probably not.
That's sobering. That is what is Jim? You talk to Jim Sinclair all the time. He's your business partner now. What does he say about what's going on? What are some of his thoughts about what's going on that you've been talked about?
Well, we've even talked about this on our cross interviews for the last couple of weeks. It's highly likely that when this thing goes, it's only going to be a 24 or 48 hour event, and everything will close. This is not. We're not looking at, a long grinding bear market. You're looking at a light switch being switched off, and the system closing.
So, you think it'll just happen over the weekend, and there's not going to be any warning sign. Well, I guess we're getting the warning signs now, aren't we?
We are getting the warning signs now. What I just told you, that there's only there's 280 million ounces of silver that's contracted for May. First notice day is next Friday, and there's only 31 million ounces available to deliver. If that defaults, if let's say that we had 100 million ounces standing next Friday for delivery, and only 31 million ounces available, and those longs refuse paper settlement, and they demand physical settlement, that's going to be a default. We get a default in silver or gold, and that will spill out everywhere. That'll break confidence in everything.
And you're saying that, when you hear the number, see, when I hear the number, I think, wow, 32 million ounces, to me seems like a lot. To you, you're thinking 8 days production.
It's nothing. It's in dollar terms, it's nothing. It's $500 million. It's $500 million. That's it. That's all that's available to deliver. And from a production standpoint, yeah, it'd be 8 or 9 days worth of production, something like that.
So this is the warning sign. We're getting it here and now.
Right. You saw the action. Gold and silver were ready to explode, and they were exploding upward. Gold was up Thursday morning. Gold was up $25, and silver was up 77, 80 cents, something like that.
Yeah.
I left the house, went to pick up a breakfast sandwich, came back 15 minutes later, and gold was up $5 and silver was down 20 cents. And that's when they sold 37.5 million ounces, which is 18 days worth of production, in less than 10 minutes. First off, who has 37.5 million ounces of silver to deliver? COMEX doesn't even have that to deliver. And secondly, if you did have that silver, why would you sell it and blow it out like that and knock it down $1 so you got the worst possible price? The answer is no one. No one has it, and no one would do it except someone who wanted to contain the price.
And the CFTC had this long, dramatic investigation for 5 years.
They're
part of the fraud, basically. In 2013, they said, we couldn't find anything in the silver market. That's basically what they said. They didn't have the evidence of manipulation.
Well, that's not what they said. They didn't find anything actionable.
Oh, actionable. Yeah.
And there's a difference. Yeah. I mean, if this is sanctioned by the Treasury or the Fed or somebody, then is it actionable?
And do you think it goes that high? Treasury, Fed, this is sanctioned by them? Of course, it
goes to the dollar. Gold and silver are competition for the dollar. So yes, of course, it goes to national security. If there's something out there that can bust the dollar, that's national security. And these markets blowing up will bust the dollar.
What do you suppose? Do you think any of this came up in the meetings they had at the Federal Reserve, and also the meetings with the Federal Reserve and the President and Vice President at the White House a couple of weeks ago? Do you think any of this stuff come up?
Absolutely.
All of it?
Yeah, there's no question. What was it, 2012 or 2013? There was a weekend meeting, followed by the next day, gold got slammed like, I don't know, $40, $50, and silver was slammed. Of course this comes up.
But you're saying that even though it's national security, they're running out of play space. They're running out of options to keep it propped up. Is that what you're saying?
Right. The can is getting heavier and heavier, and they can't kick it. The heaviness of the can comes about because the physical gold and the physical silver doesn't exist to be delivered. Just look at how much gold is going into Shanghai each week. You're looking at somewhere around 30, 40 tons per week of gold going into Shanghai. Close to a couple hundred tons per month. 2,000 tons per year. The COMEX only has 17 tons, or they say they have 17 tons available for delivery. And 14 of that is already spoken for from this past month's delivery. So it's less than 1 week's worth of gold that Shanghai imports every single week.
This is going to end soon. By your numbers and your math, you're saying this ends soon. I mean, you're being gracious and saying before the election, but I mean, come on, what's your gut? Your gut thinks we're close. Isn't it? I mean, come on,
Absolutely. I mean, it could be, like I said, it could be Monday morning. It could be any day. The default is coming.
Bill Holter, the Holter-Sinclair collaboration over at JS Mindset. Oh, I want to talk to you about your site. You've changed it some. Still free information on the front page, as I go there all the time. But you also have a pay side, a paywall. Explain what you're doing over there.
The original JS Mindset remains the same. My writings, Jim and I do. My writings are on the subscription side. Jim and I do a weekly chat, if you will. We take subscriber questions. We intend to actually interview various individuals. Actually, you're one that we're going to interview. I'll talk to you about that. And that's on the subscription side. The cost is $119 for the year. And I'm going to tell you, the interviews, just me talking to Jim, to hear Jim talk once a week, that's worth the price of admission right there.
Oh, but Jim Sinclair, he's, I mean, now we know, because he was telling everybody to buy gold, buy, it's going to go up, it's going to go up. And the advice was sound, but now we know that Deutsche Bank admitted with other, incidentally, all these banks are primary dealers. Isn't that interesting?
Right. Of course they are.
They admitted to rigging the markets, they admitted to fraud, and basically racketeering. They admitted to racketeering.
Well, Greg, that supports their product. They're primary dealers. Their product are treasuries. It supports the price of treasuries. It allows interest rates to be pushed down. You couldn't have $5,000 or $10,000 gold and 0% interest rates.
Do you think we would already have that if they wouldn't have been suppressing? I mean, we were at 1900 and when they started to put this on steroids. So I mean, we'd certainly be at 25, 28, 30,000, and the debt exploded. The debt never stopped exploding.
I think there would have been a panic into metals by now, because the price suppression has been used to hit people's emotions. It's been used to hurt their psyche. And I think if they had not dumped all this paper to suppress the price, you would have had, the pot would have boiled and there would have already been a run. There would have been a run on the bank, a run into the metals.
We'd already had gold at multi-thousands of dollars right now.
Yes, absolutely.
So Jim Sinclair's and yours and everybody else's should buy the metal because, the debt is exploding, basically.
Right.
Was good advice, but it was made to look like bad advice because of the criminal racketeering suppression scheme by major primary dealer banks.
Right, and gold is real money that cannot default. That's what this is all about. When the whole system defaults, what's going to be left standing? Gold and silver, real money. There are no one else's liability.
And Jim Sinclair and you sit down every week and you take questions and you have a private. Some of your articles you don't put out all your articles anymore, which are fantastic, incidentally. But now that's also behind the paywall. It's $119 a month. That's it. That's your only way to go. It's $119 a year. So it's $119. Boom. That's it. That's all you have.
Right.
For payment, and then you still have free information.
Well, you have the free information. I do have brought in a couple of outside writers that have written a couple pieces. Only about one or two of my writings per month are out to the public now. The rest is for subscription. And then, of course, our interviews each week, those are for subscribers.
Well, let me tell you something. Jim Sinclair, I followed him long before I followed you, but listen, both you guys have been spot on. Now we know the advice was sound, but there was just criminal activity to make it look like it wasn't sound, but you guys should feel pretty dang vindicated at this point. Listen, tell Jim Sinclair that the folks here at USA Watchdog say hello. Bill Holter, thank you for being on again. That's a JS Mindset. They have now a pay side to the free site. There's also a pay side to it. Seems like it's worth the money to me, Bill Holter. Thank you, Bill Holter, for coming on today on USAWatchdog.com.
Thank you, Greg. My pleasure.